Good afternoon, welcome back. This is Simon Adim. If you haven't met me before, I'm a nurse from Southeast England. In today's video, I'm going to talk about getting a house in the UK. If you are a nurse, is it possible for you to get a house? I made another video, I'm going to upload it very soon, about getting a house and how you can save money to in order to get a house, and what's the best way, how can you save when you are looking after 2 or 3 kids, or you have other things to pay as well. So please stay tuned for that, which video is coming online soon. And in today's video, I'm going to tell you the procedure and what's the requirement if you want to get a house. You're a nurse, you're working in the NHS, and you want to buy your own house. So the process usually is for getting a house in the UK. It's not like in our countries that you pay a certain amount of money and you can get house, unless so what happens is usually we give the money and get the thing that we want, isn't it? But if you are a businessman or you are someone who has loads of money, they can obviously buy a house in cash, or they don't need to get a house on the mortgage. But middle class people like us here, salary people who are on salary, they, in order to get a house for them, they need to make their savings, and they need to be here in the country for a certain amount of time, and they can get a house on the mortgage. So that house will be on your name, but you will be paying the mortgage. You will be paying a certain amount of money for at least like 30 years or 25 years, and on top of that there would be interest as well. That's how we get a house in the UK. If you don't have cash, some people, what they do is they sell their house back home, and they can give huge amount of money in advance to get a house here in the UK. So it's good idea. For example, if you are getting a house for 250,000, you will be paying 10% deposit. Or if you are, even if you are getting so any amount of house you're getting for example, if you getting a house 4 bedroom or 3 bedroom for 300,000 or 400,000 pound, you will still need to pay 10% deposit on that. So for example, if I'm getting a house for 250, I will be paying the deposit around, maybe, how much is it, 25,000 for example. So you will need to have 25,000 in cash in your account in order to get a house for 250, 100,000, 250,000. Yeah. So yeah, 10% deposit is mandatory. On top of that, you should be in the country for almost 2 years. And when you go to the agent, what are their requirements, I'm going to talk about that as well. So you go to an agent, any agent you can choose. Most of them are registered, and most of them are really really good. So you can go with the agent you feel comfortable with. Sometimes, most of the times, they check your eligibility, they check your affordability according to your annual income. So they will ask you to give the salary slips, and also if you're doing any kind of overtime, they will be asking for that pay slip as well. If you are a temporary worker or you do part-time work, then you need to disclose that as well, and you need to provide the pay slip for that. So for example, there are two people in your family who are earning money, and you want to get a house, joint house, like with that person. For example, me and my husband, so we submitted our pay slips for both of us. And for a nurse, if you're working in the NHS or you are working under any government sector, you need to give them the pay slips for at least 2 to 3 months. But if you are doing bank partners, or if you're doing any sort of part-time jobs, they will ask you for the pay slips for 6 months to 1 year. Why is that? Because sometimes people do bank partner job or bank duties for certain amount of time, like once in a month or 2 times in a month. So there should be consistency, so there should be if you have pay slips for 6 months and you have worked for 2 days for the bank in each month, that should work for you. And if I work one bank duty per month, every month one bank duty, so I need to submit that pay slips to them as well. So what's the point of submitting two pay slips, one with my regular job, the other one with the bank partners, the one I'm doing part-time job, is because getting a house, the amount of the house that you are going to pay, it will depend on your salary. It will depend on your annual income. So if your annual income is, for example, um, 3,000 or 3,000 per annum, and your husband's annual income is 1,000 per annum, you will be eligible, for example, for a 3-bedroom house or a 4-bedroom house, depending on your annual salary. I will not go in detail about that because I'm just giving you an advice. I am not a legal solicitor or an agent, so I'm just giving you an example. If you want to get a house, it's just a tip for you. If you want to get a house and you want to get a big house, so for example, you want to get 4-bedroom house or a 5-bedroom house, you need to have more income. All right. If you have less income, you will be able to get a house or a flat, maybe 1-bedroom house or 2-bedroom house. So it depends on your income, it depends on your annual income. So that's the first point. Start getting your pay slips ready if you want to get a house, pay slips for both of you. And also you need to give them, if you have kids, they will also ask you how many hours per week you work and who is looking after the kid, how do you guys manage. So according to your situation, your current situation, they will give you the offer. Okay, they will tell you they will be getting the loan for you from the different banks. There are different banks who give loan for the mortgage, so they will be applying for you, they will be working on behalf of you. All right, the agents. So for example, the agent says, okay, Saima, this is your salary, this is your husband's salary, and according to your salary, I am only able to give you the amount of 250,000, yeah, 250,000. So they check the affordability. They have a different criteria. They check the eligibility, they check the affordability, like whether you will be able to afford to pay back the mortgage. And when you are paying back, there will be interest on it as well. So with each year the interest rate is different, and so you give 10% in advance, and the rest of the money you pay according to your contract with the company or your contract with the agency. You tell them that, okay, I'll be paying you 10% in advance. That's the must. But if you can pay more, well and good. You don't have to pay extra money, and you don't have to pay extra interest on the money that you're going to pay. So I'll pay 25,000 in advance, 10%, and then the rest of the money, 225,000, to 225,000, yeah, I'll be paying interest on that money. Okay, so paying an interest, it's a lot of money. I'm telling you, you will be almost paying double the money. So you are owing 225,000, maybe you will be paying them back 500,000. Yeah, so if you have cash, you can give them in advance, and then you don't, or you can make a contract or say to the agent that, okay, I'm going to finish, I want to make the contract for 25 years or 30 years. Most recommendable is 30 years or 35 years. So you are going to pay back that money in 35 years. When you are done with your money, when you paid all the money for 35 years, then the house officially will be yours. So I can't say for sure, I can't say it that in the beginning when I get the mortgage, I can't say that it's my house. I mean, it's on your name, you are the legal resident. No one will stop you doing anything, but in order to make some amendments to your house, you need to get permission from the government. That's another topic, another thing. But no one will stop you. Will be eligible for the your resident rights. You will get the registration, you will get the registry paperwork, everything you will get. But according to the government, the house will not be yours until you pay the rest of the money. So for 35 years or 30 years you will be paying the money, but the interest rate you can fix it for 2 years or for 3 years. For example, if you are getting a house for 250 100,000, you can tell, they will tell you, the agent will tell you the interest rate is 5% or the interest rate is 2.3%, like that. So or 1.4% or something like that. So they'll tell you, and they'll give you the different options. So you can tell them, you can make your decision and tell them, okay, I want to fix that interest rate for 2 years, or I want to fix it for 5 years. It's totally up to you. That decision will be yours, but your mortgage advisor, she will he or she will guide you as well, what is the best option and what is the current situation at the moment. So also sometimes what happens is the house prices go down or up, so the interest rate will change accordingly. But if you have fixed the rate, if you have said to them that I will be having the fixed rate for two years, you will be paying that amount of money only, you will be paying that per that interest rate only. Yeah, I think I didn't give a proper example. So if you have 2% interest, for example, if you have 2% interest on your mortgage, and you fixed it for 2 years, for the 2 years you will be paying that amount of the interest. And in the first year, if it goes up by 5%, it will not affect you at all, you will be still paying on the same amount of money. So some people fix it for 5 years, some people fix it for 2 years. It's totally up to you, and I can't give you a suggestion for that. It's entirely your decision. So that's the interest rate we need to think about. The mortgage advisor will guide you about that. What happens then, if you then they say, okay, we are happy for you to have this money from us, we are happy to loan you this amount of money. You go around and look for the property, look for the house, and if you find any house that is suitable for your family, or if you find a house that is good for you and you're happy with that purchase, let us know. You go back to your agent, you tell the address of that house to your agent, and they will look it into it for you. They will check for you as well. If you have any concerns, you can ask them about the flood rate, you can ask them about is there any school nearby, any parks nearby, or any petrol pump nearby, and also if there is any what do you call them, any sort of chemical factories or chemical stations nearby, because the residence area shouldn't be having petrol stations nearby. Or you can have, but obviously sometimes some people have problems with the smells of the petrol or diesel, so and it can affect your lungs as well. So make sure you check for that, if there is any radioactive rays in that property or on the soil of that property. So there will be different things your mortgage advisor will be telling you. When you tell them about the property that you are interested in, they will be doing a survey for you, they will be doing a valuation for you for the property. So you will be the one paying for that evaluation. Yeah, so you go to the agent. So how we did it, you went to the agent, you gave your pay slips, they agreed to give you the money. Now the next step is doing an evaluation for that property. So you are going to you're going to get a solicitor for you. The agent's job is done here. They have showed you the options, they have lent you the money, the mortgage advisor, they have guided you all those things. So here now you need to have your solicitor, your legal advisor, who can guide you in a better way. And your legal advisor will be asking you for the evaluation report and the survey report. Now there are two kinds of surveys that can be done, a detailed one and the simple one. So simple one, the required is I think their fees is £500, and if you want a detailed one, the fees is different. So if I would say it's best to have a survey done, because if there is any problem in the property, if there is any leakage, if there is any dampness, if there are any trees which are invading into the property, you need to know about them, and maybe it can affect your property. Is there any problem in the ceiling, is there any problem, for example, I have the wallpaper, so is there any problem behind the wallpapers? I don't know. By looking at the wall. I can't say anything, but the people who come for the evaluation, people who come for the survey, they will do the survey in detail for you. They will look behind the windows, they will look behind the walls, they'll also look behind, look underneath the drainage pipes for you, also the windows, if they are double glazed or not, if the doors are well secured or not, if there is any smoking alarm fixed in the house or not, because safety is very very important. So smoking alarms, they'll check for you if there, if this property is going to be affected by dampness, or when it rains, is it going to affect it. So these kind of things, they will be coming and checking it for you for the survey report when they do the survey. Also they'll check for you the boilers, they'll check for you the drainage system and water pipelines. Is it going to affect you in any way? Is there any pipes under your property which belongs to the government or to the other society? So these are the things you need to know when they do the survey. So I would highly recommend, if you are getting a house, if you are getting a property, if you are getting a buying a property, it's best to have a survey done. Some people say it's okay, no need for the survey, we have seen the property, but it's only 500 pounds, the normal one, the normal survey. So I would suggest you must have it done. And after that, the survey report, then your legal advisor will check for you if there is any raise in the house, or in any raise from the soil which can affect you in any way, if there any radioactive rays. Yeah, they do check, they check the flood system as well. Where when was the last flood happened in this area? Is it going is the flood going to affect your property in any ways? And on top of that, they ask you to buy a house insurance. So you are going to pay for the survey, you are going to pay for the house insurance as well, and you are going to also pay for the life insurance. So house insurance is the must, but life insurance is totally up to you if you want to do it. But in the life insurance, what they say is, if something happens to one person or to the other person who are buying the house together, if something happens, who is going to pay the mortgage? So if you are getting the life insurance and one person unfortunately dies or something happens, your mortgage company will pay for the mortgage. Okay, so it's not lots of money, it's only sometimes 30 pounds or 40 pounds per month, but for the entire 35 years. Yeah, so in those 35 years, if something happens to someone of to either one of you, then the mortgage company will pay for you. So that's the life insurance coverage. And the home insurance, they do the insurance for the contents, they do the insurance for the building as well. So for, if you want to get the building insurance in case there is a fire, in case there is flood, or your house is affected by the rain, or fire, or what do you call them, any other kind of man-made or natural disasters, your insurance company will pay you for that. And if you have the home insurance, and that's the mandatory, you must have the home insurance. And you can also with the home insurance, there are different options, but you can also choose the other option for the contents. For example, if you have a TV, or if you have a fridge, or the carpets, if you have kids, maybe someone drops paint, or a kick, or your TV falls down, or something happens to your contents in the property, the insurance company will pay you the charges. But there are certain terms and conditions. So if you're buying the home insurance, the property insurance, you must read it through, you must read it in detail in order to buy the package for you. Yeah, so that's the home insurance. And also you need to tell them the date, what date you want to move in, because there are different kind of properties. There are freehold, or there are chain free, I think they say chain free. So freehold property means it's not connected to anyone, it's yours. The landlord is the main owner. And the chain one, they say they need no chain, it means it's not connected to anyone. It's not connected to any other what do you call them, any other landlord or anything. The freehold property is all yours. It's under the name of the landlord. And if they get a new house, you will be able to move in. So means freehold means the landlord is, I'm not sure, but that's what my mortgage advisor told me, that if your landlord gets the house, you will be able to move in. And no chain means you can move in directly. Okay, so that's the thing you need to know, whether you're getting a freehold property or the other one. There is another option, I can't remember it for it's not top of my head, but it's not coming on my tongue. So yeah, so it's better to get a freehold property. And also, when you're getting a property, you need to know whether it's in between the other houses, or it's an end terraced house. So if you are getting an end terraced house, means your house will be the corner one. You will not be connected with, you will be connected with one neighbor, but on one side you will not have any neighbors. So end terraced house, usually they are expensive, but they are good for you. At least you will not have neighbors on one side, because sometimes you can't say for sure what sort of neighbors you are getting, because some people, they can be very nasty but some neighbors are really really good as well. So you need to know all these kind of stuff. And terraced house probably are the good ones, because of no neighbor on one side, and also um, the if you need to shift, if you need to move some stuff in or out of the house, you will have enough space. And your roof from one side will not be shared. But in case if you are in the middle of the neighbors, you have neighbors on which one side, neighbors on the other side, you can have many more problems in terms of noise, in terms of yeah, I can say for noise only so far. Can't think, I'm not going to make this video very very long, guys. I'm going to just winding it up. All right, so yeah, so make sure you check for the groceries, you check for the supermarkets close by, you check for the schools, you check for the nurseries, and also you look for any because sometimes people, they do chemical stuff in their house if they have garage, or if they are burning any sort of metals inside the house, or because some people do their business inside their house. So you need to know, your legal advisor will check it for you, if there is any chemical related property near to your house, or if it can affect you in any way. All right, so you need to know these things. So that's all, to be honest, about getting a mortgage. I have given you the rough idea. They are going to check your affordability and your eligibility, whether you are eligible to get a property with your salary, with your annual income. So how you can check, there are multiple websites available on the Google. If you check, if you go on Google and type getting a mortgage in the UK, they can give you the eligibility criteria. You can check if you are eligible for that amount of money or not. So according to your annual income, you can check online how much money you can borrow from the bank, how much money you can loan from the bank in order to get a house, in order to get a mortgage. All right, there are multiple websites available. You can even on the agents, if you know any agent, you can search on their website as well the eligibility criteria, whether you are eligible to get a house or not, and how much you can borrow. That's the most important thing, because even when you go to agent, they'll ask you, so have you checked your eligibility, or have you checked your affordability, how much can you borrow. So most of the times, if you don't know anything, you can just tell them, see, this is my salary, this is my husband's salary, and we haven't searched anything, we haven't searched about the eligibility or affordability, we don't know that there is anything like that. So they can do it for you. They will tell you, okay, Miss Aima, this is the money we can lend you, we can ask the bank to give you this certain amount of money. So apart from the deposit, if you have deposit, if you're getting a house for 300,000 pounds, you need to have 10%, 30,000 pounds in your account to pay 10% deposit. And on top of that, there is evaluation fees, there is solicitor fees. If you are hiring a solicitor, there is a solicitor fee as well, roughly 2000 to 25,000, 2000 to 2500. That's the solicitor fee. And also the insurances, you are going to get the house insurance, you are going to get the life insurance, and what else was that, if you need to buy the furniture for your house. So roughly you should have that, you should have an idea. You can write it down, roughly 10, I would say 5 to 6,000 additional you should have in your pocket apart from your deposit. Okay, so yeah, because some people, they don't say it, but they don't tell you in advance. But if you have a good agent, they will tell you how much expenses, how much money you need to have in your account in order to get the property, and according to your eligibility. And there is other sort of house house scheme they do in the UK as well. It's what is it called? So this is freehold, when you pay advance deposit and you get the house. There is other sort of house, according to the bid. That kind of that's a new process they have implementing in the UK now. So you can bid and you can give your estimated. So for example, you saw a house and you are interested in that house, and you feel like you want to buy this house. Yeah, so what I was saying is there is another sort of selling procedure for the agents. They do is under auction. So you give them you go visit the property. If you like the property, you tell them, okay, I'm happy to pay 250,000 for this property. And the agent who is showing you the property, she'll write it down, he or she will write it down, and then give you a call. And if someone else goes into that property and they say they are happy to give them 260, so obviously they'll give the property to that person. It's called I am sold, I think, and it's under auction procedure. They sell the property. But the bad side in auction procedure is you will be paying the money in advance, and you have certain amount of hours, like 2 hours. Within that 2 hours you need to pay almost 4% or 4%, I think 4.6% was it. And I wouldn't suggest that, because some people, after doing their evaluation survey, if they found a big problem in the property, they can't get that money back, they can't get that 4% or 5% back. So that's the bad side. So if you are going for the property, I wouldn't advise you for the auction procedure. But if you have a very good legal advisor or solicitor or your agent, if they explain you things in very detail, and you want to have the survey done prior to paying the 10% or 4% advance, if you have the survey done before that and you like the property, you can go for it. But if there is any problem and you have paid the 4%, you won't be able to get it back, because it's non-refundable. All right, so that's the problem with the auction procedure. But if you like the property and you're happy with it, definitely go for it. And even if there is any problem, you can't go back and say, okay, I'm not happy for this to get this property or to get this house, because you have paid for the 4% advance. That's non-refundable. Okay, so if you are going to get a house, go through the normal procedure. No need to go through the auction and bidding procedure. So that's all for today's video. If you find this video was helpful, please give me a big thumbs up and let me know in the comment section how was it, and was it very useful, was it helpful. I'll see you soon in the next video. Till then, take care. Bye bye. God bless you all.